What's up, guys? How's it going? Happy Thursday morning. So yesterday was kind of a semi-big day in the market. It's kind of exciting. So the Feds talked about basically what their game plan is with interest rates and stuff like that, and where they think it's going to go, inflation and all that stuff. It was in the back half of Wednesday afternoon. I've been laying low, not buying anything this week or half of last week, but I went heavy the week prior when we had that nice little correction. Before I get into it, make sure you like, subscribe, comment below. I'm trying to get to 500 subs by the end of this month. If we can get to 300 by Sunday, that would be really awesome. I think we can do it. Just hit the subscribe button. It's right there. It takes literally 1 second. So much appreciated if you do that. So yeah, the Fed's title is the Fed is lost. I mean, that's my opinion in short, but I'll get into detail why I think that. So really, the market went green after the news today. So obviously I said it happened in the back half of today. They basically are not sweating anything right now. So I think they're really in la-la land, to be honest. They're saying that they don't think interest rates are going to hike up. So interest rates will remain low till 2023. I think they're out of their mind. I think they're going to slowly, once things return back to normal with the vaccine rolling out. President Biden said that he plans on it being readily available by May 1st. So I don't really understand how the Fed thinks that it's going to remain low. Really, when things get more back to normal, banks are going to raise the rates up because people are spending more now. People are doing things again. Things are opening back up, like traveling and stuff like that. So I don't understand what they're saying by it's going to remain low until 2023. Treasury bonds are going up. It's just, none of it really makes sense. So I would take what they say with a grain of salt, but the market went up green after they heard this news today, which makes sense because if you're just going strictly off what the Fed says, yeah, that's all great news if you're an investor like you. Interest is low, everything's good. So I get it. Before I dive into it a little deeper, Dow Jones went green 0.57% today. S&P 500 was 0.28% positive, and the NASDAQ was 0.39% positive. So full green day for all three. So they also said inflation is less than 2%, they predict. I don't know where they're getting this number. I don't know if they forgot the fact they printed, the first stimulus was what? 2 trillion or 1.9 trillion. Then they had another one in the fall that was smaller. You might have to write in the comments below what it was, but I think it was around, what was it? Close to $1 trillion, maybe a hair under. And then they just did another one that's over like 1.5, $1.7 trillion. So they just printed like damn near $4 trillion of money in the past 12 months. And if you go back in recent time with inflation, last year, from 19 to 20, it was 1.8% inflation. And then if you go from 18 to 19, it was 2.4% inflation. But they're saying it's going to be less than 1% with everything just happened. I don't see how they're getting that number. That's my opinion. I think that's literally insane. I think it's going to be more to like maybe 3% this year than 3.54% the following year once everything starts, coming to realization again, in my opinion, with all the money flying around. The GDP expected 4%, and it's now getting 6.5% growth, so that's really good. I don't know if that's going to be true or not. I mean, I could believe that. I mean, they look at data and numbers and stats. They don't really look at real world, things. I think they kind of live in a bubble. That's my opinion. But that could be true, but that's good news. So really, if you're just looking at just based on the Fed's news for this, interest rates remain low 2023, inflation less than 2%, GDP expects to be 6.5 versus initial 4. That's all great news. Yeah, that's awesome. It seems like a really strong economy if that's going to be the case. However, the cost of goods, they're saying that they don't think things are going to be more expensive. Again, I don't know what world they're in, because if you look at, let's just take highways, for example, like tolls, they're going up. If you go to the grocery store, most of the items are going up. I'm in a wholesale industry where I get product from a lot of companies. Steel is an issue right now. All kinds of precious metals are hard to get. You know, there's just so many things that are rising. You know, gas. I mean, my gas in my area has gone up probably $1 in the past 4 weeks. So I don't really understand how they're saying, you know, things are going to remain the same and inflation's not there, when really you go anywhere and everything's a little more expensive. You go out to dinner, it's going to be more expensive. The cost of products like food and stuff like that, like even at restaurants, are going to go up. It really doesn't make sense, because, you know, as I said, I'm in the wholesale business. So like rates have gone up anywhere from 3 to 10%, depending on what product we buy. And that's us. So like our suppliers are, you know, it's more expensive to do things. So I don't know what the heck they're talking about when it says like, you know, oh, everything's good, you know, this is that. It just makes no sense. I think they really lost their mind, basically. So my overall thoughts, I kind of just really said it, that, you know, I would take all this information with a grain of salt. And this is a perfect reason why you don't, you know, try timing the market. You don't want to be like, oh, well, I think the Fed's going to come out with really negative news. They're going to say interest rates are going up because things are getting back to normal. Inflation, you know, it's going to rise, you know, the cost of goods are going up. So they could have said all that, right? And I can guarantee the market would have panicked and reacted the total opposite, if not twice as bad, than what they said here. I think they're not trying to scare people and make people feel good. So again, if you're trying to time the market, because if I was trying to time it, I would say, oh, well, you know, all this news is going to be bad in terms of the market. People are putting their money in treasury bonds and stuff like that. So this is exactly, like I said, like I didn't buy anything, but I also didn't sell anything. But if I sold all my stocks, let's just say, or sold half of them or half my positions, well, it just went up today. So I'd be really pissed off. And then stimulus just rolled out this week, and over the weekend it was rolling out depending on what state you're in. So you're going to see a lot of surplus in spendings, just like the last two. I mean, we can kind of predict that now. So it's just a crazy time. What I'm going to do is I'm going to hold cash. I'm not going to buy. I mean, a lot of companies are peaking, you know, highs or monthly highs or 3-month highs or all-time highs. So I don't like buying when things are at highs, because you'll always see a correction or it will come back to reality. So I'm just building my cash position. I said in my last video I was at 28%. I think I'm getting back up to about 30% cash. So that's good. So I'm ready to deploy cash when there's good deals. But that's all I got on this news. It's, you know, take it with a grain of salt. I wouldn't be thinking, oh, everything's going to be, you know, green grass and rainbows and let's just dump money in because the Fed said rates are good, you know, it's going to be low and, you know, inflation's going to be less than 2%. I think they're just giving people false hope so people don't panic or sell out. So that's my opinion. If you like this video, make sure you like, subscribe, comment below. Until next time, peace.